All right, good afternoon, everybody. Let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I purchased a little gamble with a small amount of pins, puts into the close. Pins is trading down right now. I don't really get it. The numbers looked really good, at least on the surface of things. And I am short. I was already short UPro and TQQQ. I added Microsoft, Meta, Tesla, and Tupperware to the short side. And I got back into Bank of America, real small to the long side. I also got into and then out of KRE to the long side. I made a few bucks, got out. I would have kept it, but I didn't. All right, let's take a look. We're waiting on AMD, right? AMD's upticking here, but we're not seeing that it's out yet. Looks like it's out. Trading like it. Trading up. Just traded up $3.50. I feel like we've seen this a couple times this earnings season, though, where stocks have given these kind of moves right before the report. SoFi did this Monday morning before the report dropped. Trading at 119 here. I'm like really curious now to see what these numbers look like after it comes out. This sick little $4 pop since we closed here. Let's get an after hours chart up. Yeah, what is this? Still not seeing the numbers. I'm trading above 119 now. Those pins numbers look fantastic, but they're selling it off on it. Now it looks like it's out and really upticking. Yeah, that looks like it just hit. And pulling back. And back up. 122, 120. Trading kind of crazy, still not seeing any numbers. Anybody got the numbers? There we go. 5.4 billion on revenue versus 5.3 expected. So they beat on revenue. They beat by a penny on EPS. Adjusted operating income's in line. R&D expenses came in a little high. CapEx a little bit high. Operating margins a beat. That's important. It's beat by a little bit. 20% versus 19.5. They guided down. It's not trading like it's guiding down. Oh yeah, that's a miss. Oh. I've got a little position here. 123 bought. Wow, they're not exactly selling it down on that guidance. The revenue guidance is like kind of in line-ish there. I'm surprised they're not hitting that harder. I'm on YouTube, so I'm not allowed to talk about what my trade is, but in the VTF you can just see what side I'm on. There we go. Quiet, Josh. I'm surprised they didn't hit this down harder on that guidance miss, though. I feel like you can't afford to miss guidance. Still could come down. I'm surprised it wasn't like violent on the hit of that. Just took some of my position off. AMD has been relatively weak to NVIDIA for a while. That is true. Need this 120 to crack. There we go. Just took off more of my position. Held that 120 there, though. Went right to it, held it. And we're bouncing back. Not really looking to give this thing much room here. Alright, but I gotta try to do a meeting at the same time. I love when I do this to myself. Alright. What am I doing? I'm doing a meeting. So let's talk about it. So the market again did nothing today. There was like 3 almost intraday false breakdowns. This one vicious sell-off here that happened at like 10:10, 10:15, and we had this other sell-off that hit midday, like 12:20, 12:20, 12:25, and then the third one was here at like 1:35. But they never led to anything. We just bounced right back up and kind of stayed range bound. So our big picture daily chart, sorry, I got filled. Our big picture daily chart is really unchanged. You know, I got the Q daily chart up here. What I mentioned in the morning meeting is basically for all these indices, we got to pay attention to Thursday's high and Thursday's low. And we spent the entire day for the NASDAQ in between that range. We spent the entire day for the SPYs in between that range. Really very, very tight day. And the IWM, which was super strong yesterday, was decently strong again today, leaving us a nice little bottom side tail into this 195.80. But I said in the morning meeting that the IWM is a little bit different right now than the SPYs and the Qs because of the break higher. The IWM is the only one that broke higher. So I wanted to see if we could lose Thursday's high in this thing. And we did. But we snapped right back. We closed at it. If anything, this looks like a continuation hammer. Looks like a continuation tail in the IWM, which can lead to higher prices. So the market continues to look pretty fantastic here. I'm trying to push the short side. I really am. I know that the uptrend is still there, but I've got a bearish thesis, and the market is not confirming it yet. But I still have that penalty box candle from Thursday that I'm kind of leaning off of. So I added into the short side. You know, I still got UPro, I still got TQQQ. Tesla was a good winner for me on the short side. I was looking to be short kind of versus this 270 area, but I also shorted Meta and Microsoft and did not have the same success there, especially with Meta. Meta was really strong, so I'm down a bit of money in this one. The Meta daily chart looks great. It looks super bullish, so I'm going to be keeping a pretty tight leash on this, though I did keep some short overnight if it starts clearing up these highs. I mean, the Meta report was excellent. It's building out this bull flag. It's just, it was relatively weak early on in the day today is why I went after it. I thought that this market could break down a little bit further, which it did not. That Meta with this opening weakness could be a good pullback, despite the fact that it had an excellent earnings report and the chart looks bullish as all heck. So that was my worst one today, but I did keep some of it still versus that daily level. Microsoft was a little bit in between. I'm down small in Microsoft here at the end of the day. I'm also keeping it though, and I'm keeping it tight. I'm still looking for the, what I was really looking for was a break of 334. So Tesla and Meta I hit in the morning meeting as I was talking to you guys. Microsoft I didn't. I put a sell stop at 334 for the entry. 334 was broadly a support zone yesterday for the stock. I know that it extended a little bit lower than that, but I thought with some opening weakness, if the market's weak, that I could try to get a jump start on Microsoft to the short side with a sell stop at 334. That triggered. I got zero follow through to the downside. I did not have a ton of size on it because I'm giving it a decent amount of space. I added to it a little bit on the way up. I was able to cover some into the close as we kind of pulled back and closed a little bit lower with Microsoft. But at the end of the day today here, hold on, I gotta manage this position real quick. I probably should have gotten out of that AMD on that break higher there, but now a seller came in at 10 cents. They broke that seller amount. They might still bring this thing down. I'm really surprised that this AMD is holding in this low 120s area, but I don't want to. I really don't want to be trying to be focused on that while I'm trying to do this meeting at the same time. Tupperware just got hit. Tupperware is the other short that I have on, which I am keeping. I made a couple bucks in AMD. Yeah, Tupperware getting hit here. Yeah, so Microsoft wasn't so successful. Tesla was super relatively weak. It was great. The TQQs paid me a little bit today. UPro paid me a little bit today. And Tupperware was great. Tupperware was great, but every time I tried to really lean into it and get very heavy, I couldn't get follow through on it. I would, have a smaller position that I was kind of working that position, and then there was like 3 different instances where I really leaned in on this Tupperware to try to size up in a big way, and just couldn't get follow through on it. I'm trying to remember exactly where in the chart that was, and I don't remember. But they were on the way down. I remember one time specifically, that's Microsoft, no wonder I don't remember. One time specifically I know was right here. There was a massive seller on the NYSE at $5.46. So I whacked the bid for a lot of stock and literally just put a stop at $5.47, which I then raised to $5.48 because I was afraid of getting stopped that on a through print. I don't really trade like that anymore, but that seller was just so massive. And this Tupperware, which is now getting smoked here after hours, reminds me a little bit of Bed Bath & Beyond, and that's why I was really trying to push it. I remember when Bed Bath & Beyond had its last squeeze, I was long, and the stock at that point really looked like now it was going to be going bankrupt, and I was able to fully liquidate my long, and I think it worked its way all the way up from like $5 to like, I think it was the upper teens, 16, 17, 18, 19, something like that. And I used that move to get 100% out of the long that I had, and then I flipped and I got like really heavy to the short side in Bed Bath & Beyond. And I don't remember the exact prices, and I can't pull up a chart because the stock doesn't exist anymore. But Bed Bath & Beyond, assume my price was 18. I probably got out of the entire thing at 14 or 15. And it was like a nice little home run, to be honest. But I knew the stock was, at that point, was probably working its way towards bankruptcy. And I remember just being annoyed at myself for not holding for the move to $1, I don't follow Tupperware in the same way that I followed Bed Bath & Beyond. I knew Bed Bath & Beyond really well. I knew the story really well. I knew the fundamentals really well. I knew that company was pretty much shot at that point. That last squeeze, I don't remember whatever happened to that investigation that was supposed to happen to, was it Ryan Cohen, who looked like he may have, I don't want to make any accusations against anybody, but looked like he may have possibly manipulated the stock higher on that last run. And I remember we were all assuming that there were going to be big SEC investigations on that, and nothing ever actually came from it. which is interesting. But he created that big squeeze. I don't remember exactly how. It was something that he said, and then we saw that he liquidated his entire position into it, and so did I. And then I flipped short, and just knowing at that point the company was probably heading towards bankruptcy, which is what eventually happened. And instead of holding my stock for that move to the upper teens to $1, I made pretty good money in the short, but I was all out by 14, 15. Tupperware here, a little bit of a different situation, and I don't know the company nearly as well as I knew Bed Bath & Beyond at that point. But I didn't see that there was any new news that came out in Tupperware. It's got a 25% short float. The stock was trading at 60 cents. It looks like it's working its way towards bankruptcy, and now it's just had this insane move from 60 cents up to almost $6. So there was a couple times today where I'm working this thing to the short side no matter what, because I think that this pricing at this point is ridiculous. Where does it belong? I have no idea. $3, $2, something like that. On the kind of core position I have, I'm really just looking for a move down to like 4 to make a few bucks. But what I was thinking was, and I was remembering that Bed Bath & Beyond move, I was like, well, what if I could find some spots here with smaller, tighter risk where I could just lay into this Tupperware, with thousands and thousands of shares, and see if I could actually get a move back to 75 cents in this thing, or $1 in this thing. Now, if I'm going to do that, I certainly have to make sure that I've got stops in place, because the flip side is maybe I'm right, but they squeeze it till $9 first, and I could have a problem. So there was like 3 different instances today where I was like really trying to get heavy to the short side with tighter stops. And the last attempt for me at that was right in here with that big 46-cent seller. But there was also someone that was holding this thing up, and I was so surprised at how heavy they were taking that New York Stock Exchange seller at 46 cents. And I did get this flush, this tail flush here at 240s real, down to $5.24. And what I was doing is, if I'd get the moves on the big size, I was covering enough of the position just to get the risk covered if the stop triggers, and then being super greedy after that. So I shorted like $5.45 with a stop loss at $5.48 on a lot of extra stock. I covered a lot of it in the mid 530s, and then was planning on covering nothing of that extra stock, and to see if I could get a weak close, work towards that move towards $1, just kind of get that waterfall effect come in of selling. I was never able to get that. So like even with this trade here, it snapped right back. I got stopped out of all that extra stock for a profit, a little bit better than break even, just because of the risk reward on that. But looking for like the big home run on it, and I just couldn't get it. So I did end up keeping some Tupperware short, which is more of that smaller core position where I'm really trying to see if I can get a move to like $4. It's getting smoked here after hours. I don't know what just happened, but they just dropped this thing from close around 540 down to $4.80 here. So we'll see what happens with Tup. But I'm really leaning into some of these shorts. I'm very surprised that this AMD is not down more on some of this guidance, as I'm seeing Josh's additional commentary out of the corner of my eye. They see full year data center revenue higher year over year. Yeah, that might not be. I mean, that's good. Josh saying that they guided their gross margin down. That's not good. So we'll see. I mean, I'll be really surprised. This AMD report looks very mediocre. And again, I know that AMD did not have the run-up that a lot of the other big cap tech stocks have had. But it's the mediocre reports that I'm really, in particular, looking for the market to sell. And they did that a little bit with Tesla and Netflix on mediocre reports. The issue with my thesis more than anything has been that that most of the earnings reports we've seen haven't been mediocre. They've been excellent. So it's been difficult to have a thesis on trying to be short the potential of mediocre earnings reports when they've been fantastic overall. It's actually been a really good earnings season thus far. So I think that's all I got. I'm trying to lean to the long side here, but I'm also being mentally nimble. I have to admit to myself if I'm wrong, if this market really starts breaking up on those highs from Thursday. And that's pretty much it. I mean, it feels weird to be a bear. I said it, I think, a couple times in the VTF, and the truth is, I'm not really a bear. I just think that we've hit a point here where the market should struggle to be able to continue to move higher, and I could easily be wrong because the trend is your friend, and the trend is certainly higher. But the way that I like to trade is, I develop a thesis for the market. I try to put my money where my mouth is, but let the technicals also confirm that I'm right or wrong. And I'm still thinking that penalty box candle from last Thursday is a little bit of a signal, but it could be out the window Thursday with Amazon and Apple. If Amazon and Apple report things in the same way that Meta and Google did, forget it, this market's going to be off to the races. And one kind of mistake that I might have going on right now is this TQQQ and UPro shorts that I have on. I'm very heavy in TQQQ, and I wouldn't say I'm light in UPro, but I'm significantly lighter in UPro on the short side than I am with that TQQQ. It should probably be the opposite. The problem with the TQQQ short is that I'm taking a lot of earnings risk, basically, with Apple and Amazon, because they're such big companies. From a market cap perspective, they'll move the Qs so much, and that becomes a little bit more of a gamble type risk, which I'm not a gambler, even if I'm messing around with a couple puts into this earnings season on small size. It's more of the learning experience for me than anything, and again, putting my money where my mouth is on a thesis I have to the short side of the market. But that's all I got. I'm happy to take a look at what you guys have or any questions that you guys might have. JP Morgan just raised Apple's price target to 235 in front of the numbers. Is Apple moving on that? Yeah, Apple up 40 cents after hours. Interesting. Not great for my TQQQ short, but these analysts are such jokers. The performance chasing. The best was Rivian this morning, right? Which I had on my watch list for short, but I didn't actually short it. Rivian got downgraded from I think it was Cantor, to neutral, but they raised the price target to like $28 or $29. You gotta be kidding me. You gotta be kidding me. Who wants that kind of research? Like, oops, the stock went up. All right. What else? Questions from Mike Reed. Quick question about opening style momentum trades and specifically execution. I find that I'll often miss something off the open that I was stalking pre-market because I wasn't fast enough for whatever reason. I was just wondering if you have any tips or advice for execution of opening momentum trades. Do you ever use things like placing buy stops before the open? I don't. And I'm not sure if they'll work. I'm not sure if they work. They might work. But I know that the stop won't work in the pre-market, but the question is, if you put the stop out before the market actually opens, and now the market is open, will it work? And I actually don't know the answer to that. Pat may know. Assuming you have a game plan in place for it, when it triggers, you've already got stop, cover calculated. Thanks and sorry for the word salad. Yeah, no problem. Dimitri here saying that it should work. I don't have any personal experience with it. I always wait for the market to open, and then I put my stops, and it's exactly what I did for Microsoft today. I knew, I got the short thesis, and I had already hit Meta and Tesla, and with Microsoft, I was like, you know what? I don't want to hit this pre-market. I've got all this risk on pre-market, and it is a common gap down in a bullish market. We could bounce off the open, and then I'm, kind of bag holding a little bit on all these shorts that I whacked prematurely because I got too excited. So the second the market opened, I put a sell stop in. The second the market opened at Microsoft 334 to be able to execute. So I've never really done that pre-market. One thing I would say, I guess a couple things I would say. One is that it's impossible to capture every trade. It's just kind of part of it. There's plenty of days where I've got a lot of stuff on my radar that I want to be involved in, and I just missed something because my focus was somewhere else because I had to manage a position. It just kind of is what it is. It's okay to miss things. Ideally, you don't want to miss things that you did good pre-market research on, but it's not the end of the world. The market's an opportunity creating mechanism. There will be more opportunities for you to be able to make money in the market. So it's one thing that I would say is don't overly sweat it, just do your best. The other thing I would say, and this is not the greatest answer in the world, but this is how I kind of always answer this type of question, is you just got to get faster. Just get faster. You can have a series of alerts in to try to see where when things are getting close to your prices. That helps also. Put your alerts out pre-market so that your alerts are popping up in front of your face. But otherwise, you just got to learn to be able to get fast with your hotkeys. And anybody that's trying to like point and click to be able to trade, that's mind-blowing because it's impossible. You guys got to have your hotkeys. You got to have them down. You'll make mistakes at first by pressing the wrong button once in a while, but speed, while speed's not as important as it actually used to be, speed used to be everything in this business, and that's probably why I'm so fast in the keys, is because I grew up in a market that you just had to be extremely fast for. But it's not as important now. But you still just got to practice and get good with the keys there. So yeah, I guess that kind of covers the question. What else? From Varun, I think, is the next question. We talk impact of ex-dividend and ATVI. The time it takes for a stock not in merger play to recover. Doesn't have to be ATVI. So, my understanding is that, the stock just gaps on the ex-dividend day and that it should be immediately priced into the market. I've heard about a theoretical trade, like an ex-dividend trade, where you... how did that work? You buy the stock beforehand. You buy the stock and they close on the dividend. They gap it down by the dividend amount, and you collect the dividend, but the stock will be at a slight premium above that because a lot of people don't necessarily realize that it was a dividend, and they're buying the stock because they think it's at a discounted price. That's like a theoretical trade that like you'll learn in a classroom at a school somewhere. Not something I would ever want to implement in practice because you never know how the market's going to react. But as far as ex-dividends go, I don't think that there's really any real effect. It just gaps down by the dividend amount and then trades as normal. From Varun, can we talk your entry and exit on AMD as I'm trying to improve my after-hours trading? Sure. Now that I'm out of the position, I guess I'm allowed to talk about it. I shorted the hot. Let's see. Sorry, I got to pull it up on my other chart also so I can see my executions. Ugh, chart. I can't even see that high on my chart. I shorted 123.22. The high was 125.36. I hit the short button as fast as I possibly could when I saw guidance was a miss, because very often what we see, and I've seen this a lot, is the numbers come out, the numbers look good, the stock trades up, guidance hits like a little bit later, and the guidance is a miss, and the market cares more about guidance than they do about the numbers. So they rip the thing higher on the numbers, but then guidance is a miss. So sometimes then you'll see the stock goes all the way back down and then possibly even shoots to negative territory off that. So, I knew that high was like, I honestly wasn't sure exactly what it was. I knew it was around 125 or so. It was trading at, 123 or so. I didn't know exactly what price I was even going to hit, to be honest with you. But, in my brain, I was thinking that I had approximately, $2 of risk, give or take 50 cents. And the thought process is, if I can hit this bid super fast with only this couple of dollars worth of risk, and they pull this thing back below 120, and then, bring it red, potentially even off misguidance, I've got really good stock. So it's just a news event like anything else, where you react to the news if the risk is worth it. And for me, that risk reward made a lot of sense. When I saw that guidance hit, we tend to get the information here into the VTF very fast. So I've seen it and traded it many times over the years where the market, where I hit it or I don't hit it. And then after we were to see the news, a minute later, they've wrecked that stock all the way back down. So that was it. I hit the bid just as fast as I could. I crossed the market. I took, because after hours trading, as far as execution goes, I took an offer and crossed the bid in order to actually be able to get stock. And then the plan initially was, to give it up to that 125 area, and then cover stock on the way down. So I covered some stock at like 121 and 120 on the way down. I got filled at 120 on the, or 120.01 on the bid. I think 120 was the low, and it bounced back, and it shouldn't have bounced back. And I was doing the meeting, so I decided I wasn't going to give it all the way to that 125 and change high. And when it got back above 123, which is about where I shorted, and I know that this is the opposite of what I always preach to traders. I always preach that you should not exit positions at your entry price, because the market doesn't care about your entry price. Trade off of pivots. So I didn't listen to the way that I normally trade, to be honest with you. And when I saw that it got back above 123, which was about my entry price, I hit out. And honestly, that's at least partially due to the fact that I'm trying to do this meeting at the same time. If I wasn't doing the meeting, I probably would have watched it more closely, maybe given a little bit more space back up to that 125. But the thought process was, stock here is back above 123 from 120 off a guidance miss. It shouldn't be back here. I can't be like staring at this thing tick for tick while I'm doing a meeting. So I'm just gonna hit out. But that's what I did, and I hope that helps Varun. From Dave, I did not trade awesome today, but I also did not trade horribly, in my opinion. Okay, I have plenty of days like that. I feel like my entries were not bad, and I was able to cover risk on 2 of my 3 trades in the indices, and due to the market being whippy, nothing worked, and we ended up just chopping around for the whole day. Anyway, to tell based on something I could have seen on the intraday charts to just call it a day early and avoid the chop. Any way to tell based on something I could have seen on the intraday charts to just call it a day early and avoid the chop. Yeah, I mean, it's always tough. I feel like the market tends to give us a signal by 10:30, 11 that there's a good chance it'll be a range day or not. In general, midday price action tends to be choppy unless we've got a real clear trend day, but it's usually already visible that we're trending by the time it becomes 11 o'clock. So I feel like you should know that the market's trending and be able to continue to push that and push those trades, or recognize that the market didn't break. And if we go back to just the 5-minute chart today on like SPYs or Qs, you had this big pull here at 10:15. You had a bounce back that was bigger than it should have been, but you got that pivot high. I think that the market's still telling you it's tradable, but you need to really break down now at this point. And we didn't really get dramatic follow through. And if anything, the bigger problem was actually the NASDAQ. When the NASDAQ got back above that breakdown area of 1010, I was like, oh man, I think this market is shot as far as continuation goes. So this makes a lot more sense to me to see a range out. The flip side of that argument you could make is the weakness in the IWM bounce initially. And obviously the IWM then really strengthened and turned into this intraday uptrend. But the weakness in this IWM, it makes sense to be going for the short here still at 10:50 in the morning on this 15-minute equilibrium correction to see us break down further. Where it probably makes more sense to put the brakes on is at 11:30 when that pivot high breaks, because that shouldn't have happened. So now you got the Qs here that have already cleared above their breakdown high. They're giving you signals that we're not getting continuation. The IWM, which was giving signals that we could get continuation, then kind of failed here at 11:30. So I think that by 11:30 today becomes your signal to kind of throw in the towel on doing anything aggressive as far as the indices go to look for continuation. So I hope that helps. And for what it's worth, I probably do, 80-85% of my trading in that first hour. That's where I'm aggressive and active. The rest of the day for me is usually position management. I'm not really doing a lot of new trades post 10:30. Which isn't to say I'm not trading. I am trading. I'm just not doing a lot of new. Very rarely am I putting on like new actual trades that are either new trades entirely or ads. I will do ad backs and do them all day. Like in TQQQ, it's not ideally what I wanted. I want the breakdown, but I'm going to continue. I mean, just here's my executions on it. I'm going to continue to trade this all day, and I'll continue to add back and cover and add back and cover and add back and cover as long as the as long as there's any movement at all. But by that point, I'm not really getting what I'm looking for as far as the real breakdown is concerned. So, hope that helps, Dave. What do I call it? The idiot attack? Yeah, the idiot attack is when you press the wrong button. that's what I call it, and it's fine. I pay the tax myself sometimes. I paid it yesterday. I was so tired yesterday. I felt like I wasn't even making sense when I was talking. I was pressing the wrong button all over the place. I was like losing track of my game plans. It was a complete and utter struggle. So I definitely did that a couple of times yesterday. But yeah, you press the wrong button and it happens. Just take your stock back and move on. Do I use Market Rash hotkeys? I used to use Rash all the time. I don't use Rash at all anymore. My markets are routed to Edge A, and I rarely use market orders. My stops are market orders, but I very rarely use market orders to just like press market buy or press market sell. Most of the time I'm using limit orders to provide liquidity and not pay the spread. And then if I am taking liquidity during the day, unless it's a stop, which routes as a market order, I'm using an uptick and a downtick key. So it has a through of a few cents as opposed to just being a pure market order. Tell me limit on any potential slippage. Josh saying as a statement, whatever you do, don't chase up or chase down because you missed your entry. He goes, that's the easiest way to lose money. Just move on. Yeah, I totally agree with that. I totally agree. Scrolling through here from Anthony. You have to consider how far AMD got pushed down the last couple of months, having two double tops. 122 is the level of the last double top, so it'll be interesting to see if it can get past this level or break back down. So it was definitely a big momentum day for it, though. I held some for earnings, sold out the last piece of 122 to get out of Dodge. Okay. Yeah, like we said, AMD has not had the run that some of those other names have had. It's not to say that it hasn't had a run. I mean, it still has, doubled over the course of the year of 2023. It's had a really big move, since May. I'm not sure exactly when the last earnings report was. I think that might have been this, actually. May 24th, 25th, which was a really big gap up. If this is the last earnings report right here, this stock has done nothing since the report, and I think it is. And that's notable, because most of the other names that I'm looking at to actually give pullbacks this earnings season off mediocre numbers are the ones where it's had huge runs since that last earnings report and maybe got a bit ahead of itself. And AMD actually hasn't done that. So AMD, it might be a little bit easier for AMD to go up on mediocre numbers than it will be for Apple or Amazon, or than it was for Tesla or Netflix. But we'll see on Thursday how Apple and Amazon go. From Ben, by 11 o'clock, I had already decided not to place any trades today. It looked like a range day. Sorry, got filled on something. Looked like a range day. Nothing really went in the first hour and a half. Yeah. There was a few individual names that weren't that bad. Caterpillar on earnings day was sick. But I didn't get any follow through in the beginning of the day on any of the stuff I was really looking at or trying to hammer home. Did any news hit on Tupperware after hours, or do we know? Because the stock did drop 50 cents randomly here after hours, but I didn't see any news come out. It's interesting, Dimitri, that you have hotkeys for, like, hotkeys that are set at that 1,100 share tier size. I don't have that. I've got, you know, all my buy and sells, and then I use the number pad for changing tier size. All kind of built in. Do you have any advice for position sizing for a new trader? I know I want to lose a maximum of $100 if I'm wrong, but I guess how do you decide how many shares to buy for stocks with various volatility levels? So the sizing is the last part of the equation. The first part of the equation is, or the first question, I guess, you want to ask yourself when you're going to enter in any trade is, where's the appropriate stop loss versus where is it trading? That's the first question. You need to know where your stop loss is going to be. And that's gonna, where your stop loss is gonna be based on the type of trade that you're taking. Are you taking a breakout? Are you taking a hammer continuation trade? You know, whatever it is, every type of trade has its appropriate corresponding stop loss that goes with it. So that's the first question. All right, I'm able to buy here at $50, and the stock is telling me that the stop loss should be at $49.90 or $49.80 or $49.50, and then you ask yourself, so that's question number one. Question number two is, how much do I want to risk? You're saying here $100. Then you have the answer to how much size you want to take. If the stop loss is $49.90, you got 10 cents worth of risk, and you're taking 1,000 shares. If it's $49.20, you're taking 500 shares. If it's $49.50, you're taking 200 shares. So the sizing is the last part of the equation. It's the last piece you back into that math based on the space risk, the difference between the entry point and where the stop loss is going to be, and the dollar risk, which is what you're referencing here as $100. If you don't want to lose more than that, you then back into the sizing. Let me know if that makes sense. Kramer talking about it on the show. I don't think that starts till, when's Kramer start? 5, 6? I'm not even sure. I don't really watch the TV. Oh wow, Christopher here saying that he's gotten some pretty wild hotkey setups, depending on how many cents he's using for trade risk. Varun, you want to speak to Trade Desk or Pat? Alright, let's see. Do we have anything going on over in YouTube? Over in YouTube land? Let's turn it on the YouTube over here on a different screen. Ooh, we got 16 likes going on. I'd love to see it. And oh, that's actually yesterday's. But I appreciate, if anyone, I don't know how I clicked on the wrong one, but if anybody is watching this one that wrote some of these kind words in the comment section from yesterday, I appreciate that you guys did that. Now let me try to find today's YouTube. There it is. Oh, this one's got 11 thumbs up. Ooh, it's going up the more I look. I love it. The trend is your friend from Robert O. I like it. Old YouTube, you can email me, doldensmith@t3trading.com. I can set you up. James John, can you give some insight on how to identify a good pivot, candle, bar, hammer, shooting star for a trade setup, and what time frame and time of day they work best for intraday traders. Sure. So you want to let the pivots come to you. I don't think you really want to predict them too much before they're actually happening. So, like, I mean, you just referenced the type of candle to look for, like a hammer continuation candle or a shooting star continuation candle, or hammer shooting star reversal candles if you're trading on the counter trend side of things. That's what you actually want to look for, and I like looking for those on the 5 and 15-minute charts in particular. In the beginning of the day, I'm very focused on the 5-minute chart, and then post like 10:15, 10:30 is when I'm really switching more over to the 15-minute chart, and that's where the trade setup is actually going to be coming from. And we didn't really have a good trending day today, so I don't really have any examples off the top of my head to look at. Yeah. When you get range days, the market tends to just be sloppy and choppy, right? It's the definition of a range day. But if you've got something that's trending, yeah, there's no great examples on the 5-minute chart of this upstart. I just typed it up because I know it was really strong in the afternoon. But this is just like flag continuation, flag continuation, flag continuation, flag continuation. Just consistent flag continuations as opposed to real pivots. But, I mean, this is called a stair-stepping trend as opposed to like a higher high, higher low trend, which you can just trade the flags and the break higher over time as well for that. I love it, Varun. I hope that helps, James. I know it's not a fantastic answer for your question, but I hope it at least helps with the time frame. From Cyril. Thoughts on the AMD relative strength reasons. It was weak in the beginning of the day. It was strong yesterday, weak in the beginning of the day, and then picked up some strength into the afternoon. And it is a leader. So, my bearish thesis that I'm having on the market is not being confirmed by the technicals, and it's especially so if the IWM is leading up, which it is. And the IWM strength is my biggest concern on trying to be short the market right now, actually. So we'll see how it plays out, but I agree with you. Your thought process is my thought process on there. I really wanted this IWM to have a weaker close today, below 197.90, and we did close below 197.90, but this was not a weak close. If anything, this is a continuation hammer, continuation tail. Oh, and that goes back to James's question, actually. Like, you can look for this type of candle to come into a chart, into the 80 EMA and go long versus that low. I know I'm talking about how I'm not a believer in the market, but it's something that's trending higher. This is exactly the type of candle where after it closes, predicted ahead of time, after it closes, the idea is that there's a good probability that this is the pivot low for trend continuation in an uptrending stock. So you can go long versus that low as a stop loss for that trend continuation. So there's an example for you right there, James, from today. And I know it's from a daily candle, but you can apply that thought process to any time frame. All right, got through the YouTube there, 11 to 20 likes, and looks like I got through the VTF. All right, so I'm gonna wrap it up there. It's 5 o'clock. We'll keep an eye on this AMD, obviously, throughout the evening today and then tomorrow. So that's it. What are you saying here, Ben? You're talking to Pat. All right, have a great night, everybody. See you all tomorrow.